Gold prices have been threatening to break above $1,600 since the start of the year, with the outbreak of unrest in Iran with the US, as well as the outbreak of the coronavirus in China, creating risk aversion in the markets and creating flows into safe haven gold. Now, on each time that we've seen a rally towards the $1,600 level, be it early in Jan when we did reach 1610, albeit very briefly, or a few weeks ago during the outbreak of the coronavirus when we peaked around 1590, we did run into significant resistance around that $1,600 level. So it was understandable over the course of the last week or so when we started to rally back up towards those high 1500s, there was a lot of skepticism about whether we can actually break through those levels. Ultimately, that rally was happening at the same time as the stock markets were reaching all-time highs. So clearly there was no issue as far as risk appetite was concerned, but the gold rally continued to occur alongside the moves that we were seeing in the stock market, as well as the US dollar, which usually has something of an inverse relationship with gold. But what we've seen over the past 48 hours is what started with a bit of a risk aversion rally on the back of those Apple warnings as a result of the coronavirus, issues with supply and also demand over in China. We've actually seen it extend its way through 1590, through 1600, and now to test those $1,610 levels once again. Now, what's interesting about the latest move over the last 48 hours is prior to this, it looked as though momentum was starting to wane once again as we were approaching those higher levels, again further feeding the narrative that we were starting to see resistance building up in those high 1500s. But now that we've broken through the 1600s, maybe we're seeing some profits being some stops being triggered, but we do seem to have propelled higher rather than slowed down, and that in itself has created that extra momentum shift to the upside. So now we're seeing 1610 being tested, but we're seeing it being tested on additional momentum, which is a strong bullish signal as far as gold is concerned. If we could hold above these $1,600 levels over the course of today, maybe even push 1620, which is historic resistance, then we could see momentum really start to build up now, and a belief build that not only are we breaking 1610, not only are we testing the $1,600 resistance level, but we're holding and we're progressing. So I think this is a real key test now as far as gold is concerned. What gives it that extra that extra belief as well is the fact that this is still occurring despite the fact risk appetite seems to be sustained in equity markets, despite the fact that the dollar is continuing to push higher. The fact that this is occurring alongside it suggests that this is very much a gold story. This is very much a bullish gold story that's driving the markets through these levels. Now, in terms of what's fundamentally driving it, it's always difficult to say, especially against the backdrop of what I've just said. But perhaps what we are seeing in a similar way to what we've seen in equity markets is the fact that the weakness that we're seeing now in China, the weakness we're seeing in other economies, in other corporate results and other warnings, profit warnings like we've had from Apple, is the fact that people are maybe starting to factor in a little bit more monetary easing from central banks. And as we've seen over the years, this has been conducive with higher gold prices because it is seen broadly as an inflation hedge. So more central bank action has typically pushed gold higher, so maybe that's what's spurring it higher even in this improved risk environment. The key levels still remain the same: 1610, 1620 to the upside. A break of this, very bullish. A break back below $1,600 before the week's out could potentially be another sign that it's just once again run into severe resistance. But I think momentum in this latest move is key.